Welcome to Investors Insights. Our topic today is inflation, naughty or nice. We have got some great discussion today regarding the Fed and what we see happening throughout the week. Also, why consumers may still be spending. And also, what about those gasoline prices? And with me to have that discussion, coming out of a great meeting this morning, I have got Trey Booth, Bobby Norman, and Todd Miller. And they have made some great points that we're excited to share with you this morning. Also know that as we continue this dialogue throughout the week, we will keep you updated on Facebook, Twitter, LinkedIn, our podcast. We've got a great podcast later this week, and also on YouTube. So please track us, follow us, and feel free to forward it to friends, family, and colleagues. So Trey, we're going to discuss the Fed and possible decisions for this week. You did a great job elaborating with details on what we may see. So why don't you start us off?
Yeah, absolutely. Thanks, Greg. So this year, 2022 is coming to a close, and I think very few market participants would disagree with the idea that inflation and the Federal Reserve have been the two stories that really have driven the market higher and lower this year. And we're getting both right on top of each other. Inflation, CPI is coming out on the 13th, and then the Fed is going to come out the next day on the 14th and announce their decision, the final decision of 2022. And so these are two very enormous data points to see if we can get the market rally. To your point, is inflation going to be on the naughty or nice list? Do we get this Santa Claus rally? If it's going to start, it's got to start here. It's
right.
Going to start this week. There is no other major data point between now and the year that really can push the market out of the current doldrums and begin that Santa Claus rally.
No, you're right. It's a pivotal week. It really is.
And we saw that a few weeks ago when Jerome Powell made his last public statement. They go through a blackout period where they can't talk to the media before Fed decisions. His last statement, he said, the time for moderating the pace of rate increases may come as soon as the December meeting. That one sentence sent the market ripping higher. Since then, the market's come back down to earth because of some more aggressive or worse than expected economic data and some inflation data last week. But this week, the market is fully expecting the Federal Reserve to raise rates by 50 basis points. That expectation is built off of that the market expects inflation to come in at 7.3%. That 7.3% is down from 7.7% last month. So we got to see this number continue to come down, the inflation number, so that it locks in that peak inflation that we saw over the summer and that continues to come down. And so then the Fed can take that data. They really don't have much time. They're meeting on the 13th when the inflation data comes out, and they're making their announcement on the 14th. So they don't have a lot of time for their models to take in that new data. So if it's aggressive one way or the other, the Fed really doesn't have a lot of leeway to move. And the next day, the Fed's going to announce. And will Jerome stick to his words that if the inflation data is positive, will the December meeting be the beginning of the end of a tight Fed? And the market would love to hear that. And that would
very much so. Yeah.
So those are the two data points. You kind of write it down. I'm sure if you're playing at home, the home game, write down 50 basis points for Fed increase and 7.3% on CPI. Those are the two big data points. If we're above on either of those numbers, the market likely will fall. If we're below on either of those numbers, the market will likely rally to close the year. So that's really what we're looking at. Just a big week before holiday.
Yeah, no, you're making a great point there, Trey. That is what we're looking at. Yes, and sharing it with our clients. So keeping you informed on that. So we will be watching closely as the Fed makes their decision. So naughty or nice. Bobby, you also, though, elaborated about the consumer and some data that the Fed should be looking at in relation to inflation. Talk about that.
Yeah, as the Fed is expecting to raise interest rates again this week, we continue to look at the overall impact higher rates are having on the economy and the markets. And with the Fed's goal of slowing down the economy or to have what we call demand destruction, we like to look first at consumer spending. And as you can see in this chart that shows consumer credit, it remains clear that consumers are still willing to spend despite concerns about the economy. And perhaps they're taking comfort in the fact that the labor market still remains really strong. So consumption should remain strong. That's a good thing for the economy. That's a good thing for the markets. One area where we are seeing evidence of the Fed's policies working is wholesale prices of used cars. And as you can see in this chart, prices have reached their lowest levels in more than a year last month. as interest rate hikes have raised borrowing costs. So used car wholesale prices have declined 15.6% from record levels that we saw back in January. So lower used car prices should help spending across other industries. That's good for the economy. That's good for the markets. And then one last thing, after the market traded back last week, I want to give an update on technicals as the market will be greatly impacted by the Fed actions this week. As you can see in this chart, the S&P 500 has been kind of sandwiched into a very tight trading range here. The S&P 500 closed last week at 39.34. So anything up through 4,100 to the upside would be a positive breakout, what we consider a tactical breakout to the upside, while anything under 3,900 would probably imply further weakness. So a lot of the line this week with the Fed raising rates again.
Yeah, no, those are, again, some numbers you need to write down on the technical analysis side that Bobby just shared. We will be watching that closely. And then also, Bobby, I appreciate you bringing up used cars because a lot of times that's a topic people aren't looking at, but also emphasizes to our clients that we're looking at a lot of details and data to see what direction the Fed may go in or make their decision. So in Ty, the holidays are quickly approaching. We've got holiday travel coming in. People apparently are not that worried about inflation in relation to buying those holiday presents or consumer spending. But what about travel and gasoline prices? What are your thoughts there?
Yeah, so it's been a pretty remarkable year. It doesn't feel like it, but gas prices year over year are virtually flat. Over the summer, we had $5 per gallon gasoline prices nationwide. That had consumers very concerned. Inflation numbers were hot. Since then, we've pulled back to around $3.50 per gallon of gas nationwide, and that's kind of, especially around holiday season, made consumers feel a lot more assured, and hopefully that will reflect in the inflation numbers going forward. I like the way one of our research partners put it. It's kind of been a tug of war between OPEC production cuts and global recession fears. With oil, there's more than we started using the strategic reserve. We had the OPEC production cuts. The EU last week just started capping oil prices from Russian oil at $60, and Russia kind of said that we're not going to do $60 oil. We'll just quit producing or find other buyers. So it's going to be an interesting dynamic going forward. We don't think that this is the end of oil prices permanently, but it's been a remarkable year. Just going from $5 a gallon back down to flat year over year has been pretty remarkable.
So if I understand correctly, holiday vacations, holiday travel takes place. People are out and about. They travel, they spend more, they go see family and friends. Trey, depending on what the Fed decides this week and the comments that go with it. And Bobby, you're saying people are spending regardless and that there's good indication we could see markets start to move up if all the combinations come together. Trey, do I get a yes from you, an affirmation?
Yeah, absolutely. Yeah.
All right, Bobby, how about you? Affirmation?
Definitely yes.
All right, Ty, you're the swing vote here. You agree?
Yeah, I'm with all of you.
So there you have it, folks. We really like the information we're looking at, the data that we're seeing, and we're hoping that we go into 2023 on a very positive note. With that said, we're going to keep you updated. You stay with us, forward this to family and friends, and we want to have a great holiday season. Take care.